Oil prices have been volatile this year. It's making it a bumpy ride for energy investors. So will that trend continue into 2024? Joining us now to discuss, Andriy Yastreb, Vice President for Portfolio Research at TD Asset Management. Andriy, great to have you back on the show.
Thank you for having me.
So this has been a pretty wild ride for oil, pretty wild ride for energy investors. What exactly happened this year? I mean, we had a certain idea about demand heading into the year, and I believe that actually held up.
Yeah, so if you look at what happened in 2023, demand was strong, and that was expected to be strong. If you go through the details, about a year ago, expectations for demand growth this year was about 2 million barrels per day. And as we sit here, we haven't finished the year yet, so we're still looking just at the estimates, but we should be around that 2 million barrels plus minus 10%. So demand grew very strongly as expected. Some of the drivers to the upside were China had to reopen. A year ago, they're just starting that process. And also a year ago, air travel was below pre-COVID levels. Where we see it right now, from at least oil demand perspective, China has reopened. Chinese consumers are moving around, they're traveling, congestion levels are high, and air travel recovered to above pre-COVID levels.
So we think about the demand we were expecting, and we got it. So what happened to the price of oil? What were the factors driving it lower?
Well, that's an interesting question, right? Because if you look at what happened in 2023, the big surprise was that OPEC had to cut production repeatedly, and despite all those cuts, oil is still down year to date. So if you look at the drivers of that, basically, if demand was strong and that helped, if OPEC was collaborating, trying to support prices, but it didn't work, the only factor left is supply. And within supply, there are three kind of broad buckets of what happened. First of all, US production was stronger than expected. If you look at DOE data for production year on year, we're just over 1 million barrels as of now. And a year ago, expectations were roughly 500,000, maybe a bit more than 500,000 of US production growth. So it was stronger than expected. Some of that might be kind of minutiae of how DOE counts the barrels and some of the adjustments to their statistics. But even without that, the bottom line is that there's a lot of crude and a lot of liquids coming from US producers. So that was first factor. The other factor was that if you look at producers that were growing production, like Canada, Brazil, Guyana, plus some of the OPEC members that struggled with production, especially in Africa, Libya, Nigeria, Angola, all of their production either grew a bit faster than expected or surprised to the upside after years of disappointment. So that was the other culprit of growth. OPEC couldn't kind of offset most of that situation.
So we got three factors there, despite the fact that the demand held in, and we had some supply factors on that side. So that was the year that's almost behind us. We're getting pretty close to the end of December and into 2024. How is the setup then for 2024 when it comes to the oil market?
So that's an interesting question. If you look at demand side first, I think that one is a bit easier to call. We don't have those one-time factors anymore, right? So we don't have China reopening that has played out largely. We don't have air travel recovering that also has played out. So next year, demand growth will be driven pretty much by GDP growth. And after all those interest rate hikes across the globe, the expectation is that economic growth will slow down next year. So if you put all of that together, expectations are roughly 1 million barrels growth for next year. And if you look at that from perspective over the long term, typically over long periods of time, demand grows by about 1 million to 1.5 million barrels per day. So we are kind of expected to be at the bottom of that range for next year. If you look at the supply growth, it's a little bit more interesting because we will still have production growth from places like Brazil, Guyana, Canada. Those are kind of outside of OPEC, places where we see long-term sustained growth. If you look at the US, that's where it becomes interesting because market expects, again, about 500,000 barrels of production growth next year. The reason I say that it's interesting is because if you look at the rig count in the US, that has declined significantly year to date and hasn't started recovering yet. And to see a sustained growth going forward, we would need to see the rig count to start increasing and companies investing more in production. But we're not seeing that yet. So it will be interesting whether US production will surprise to the downside or potentially to the upside if companies invest more or are more productive. And then I think the other big part is sanctions. We've seen Russian oil continue to flow. A year ago, people were concerned about Russian production declining because of sanctions when West, US and Europe were trying to put a cap on Russian oil price at $60. That didn't play out last year, and for expectation for now, it continued to grow. But it's another surprise that we've seen over the last 12, 18 months, that there's more oil coming from Venezuela, more oil coming from Iran. And right now it looks like the West is not enforcing those sanctions, so we might have a bit of a surprise next year as well.
So obviously some factors to watch, but it doesn't sound like a terrible setup for the energy market for 2024. Is the market itself just a little too pessimistic about where we're headed? I mean, it's a forward-looking instrument. Are they just baking in too much pessimism? So
that's an interesting question, because if you just look at our expectations right now, we expect, our market expects roughly 1 million barrels demand growth, and market also expects maybe 1 million, maybe slightly more than 1 million of supply growth. Supply growth in 2023 surprised to the upside, because everything that could go right for supply went right for supply. Going forward, we'll see if there are any disruptions to supply. We haven't seen any material ones in 2023, but year on year, it's very difficult to predict. But one concern on the downside, or one potential risk, is OPEC, right? We've seen OPEC trying to support prices around $80 oil, and obviously they failed so far, at least. And if you look at the November OPEC meeting, it was supposed to be a very quiet meeting, but they would just roll over their existing cuts and existing policies. And instead, it just became a major drama when Angola came out and said that they will not obey the quota and will produce whatever they can produce.